Hello and welcome to FrontierView's webinar on the outlook for MENA in 2021. I'm Mansour Dab, Senior Analyst for Middle East North Africa region. Before we get started, we realize that some of you may be new to FrontierView, so we'd like to take a moment to provide you with a very quick overview of our firm and how we work with executives at major multinationals. FrontierView provides world-leading market intelligence and advisory services for global business professionals. We help our clients grow and win in the most important markets by informing and powering their market monitoring, their planning, their execution, and other critical decision processes. With continuous research and insights, custom solutions, and transaction support services, we provide our clients a small sample of what you can see here with timely, actionable insights to adapt and win in changing markets. If you're not a client and you are interested in receiving a 60-day complimentary access to our FrontierView program, please leave a comment in the chat box, or you can email us at info@frontierview.com. You can also scan the code that you can see on your screens for an alternative. As part of our offering, we're actually excited to announce that we have recently launched a new mobile app, FrontierView Mobile, which is available on both iOS and Android. It includes all the relevant content you need to monitor markets, including this webinar recording and the presentation deck. We encourage you to download the app in order to have access to these insights and more at your very fingertips. Current clients can access the mobile app using the very same login information as the online browser application. If you're not a client, however, you can still download the app and start monitoring up to 5 complementary countries and access other features like daily news and notifications. Now, having briefly introduced our company, I'd like to take a moment to actually also introduce my co-presenter. Today, FrontierView's Director for Middle East, Africa, and Turkey, Research, Zeynep Kosorisolu, and myself will be leading this presentation. If there are any questions we don't get to answer, our client services team will be happy to follow up with you directly. And with that, I'd like to turn things over to Zeynep now to take us through our agenda.
Perfect. Thank you, Mansour. After starting at the global level, we will be sharing our outlook on the MENA region, touching on the recovery pace and the vaccination status across the region. After looking at the political and FX-related risks, we will move on to the public, private, and consumer sectors. We will also be sharing with you a few polling questions throughout our webinar, so we're looking forward to your contribution to those questions. And at the end, we will be also presenting a few key actions we see multinational companies taking this year. So with that, let's get started. At the global level, of course, the GDP activity, GDP growth will be returning to positive across the world in 2021. In Asia, the strong growth is largely driven by China, and the US and Chinese economies will continue to outperform this year this global average that we have, with a controlled coronavirus in China and a fast vaccination program and large stimulus in the US. The MENA region here is showing the lowest GDP growth for this year, but actually compared to, for example, Western Europe and Latin America, there is a lower base effect from 2020 that is also resulting in a slightly lower 2021 growth as well. And when we look at these growth levels, yes, they are very important to see. However, all countries will have weakened underlying macro fundamentals in 2021, and for the most part will not be recovering to their pre-COVID-19 size this year. And the blue line that you see on the slide is again largely driven by China. On the energy and the oil price front, after increasing due to the supply cuts by OPEC, largely Saudi Arabia, in Q1 2021, oil prices, we believe, will remain in that range between $55 to $70 throughout 2021. And you can see our annual average forecast for this year, which is at around $60 per barrel. An increase in OPEC's supply from April onwards is what we must closely watch. Actually, we've seen recent announcements that OPEC will not be increasing production in April, seeing the weak demand that we are currently observing in the world. So we will want to watch how gradually OPEC especially will be increasing production in line with the recovery that we'll start to see at the global level in the second half of this year. The figures that you see on this page will support oil exporters' revenues, but unfortunately will not be sufficient to simultaneously boost public sector salaries, consumer support, operational expenditures, broad-based investments. Still, we don't have that comfortable fiscal environment. And these are going to be the main kind of global factors that are going to be impacting the outlook for the MENA region. And we will start sharing with you our view on the pace of recovery across this region. But before moving on to the forecasts that we have for the markets, we would actually like to ask our audience. We would like to pose a polling question right now to ask you your expectations of when demand patterns will normalize for your product and service offering. So at this moment, I think we can have our polling question coming up. All right, I think we have our polling question. We'll give you a few minutes to answer the question. All right, I think we can close the poll and see our results.
So it appears that the majority of you, about 67%, have agreed that by Q4 you'll start to see some normalization, followed by Q3 at about 28%, and a minority of 3% in Q2 and the second half of next year. So really the majority is by the end of this year, it appears.
Yes, I think that is largely in line with our expectations as well. Let's go back to our presentation right now and share with you our forecasts for the region. Basically, of course, we will see a diversity across the markets, but I will pass it on to Mansour to kick us off on that recovery pace.
Thank you, Zainab. Now, as consumers and governments adjust to COVID-19 and global growth gradually improves, the Middle East North Africa region will also start to see higher growth in 2021. Countries with larger local economies, such as Egypt and Saudi Arabia, will recover relatively faster, while those experiencing additional fiscal and political challenges, such as Iran, Lebanon, and Algeria, will fall behind the regional average growth. Oil price will be supportive for energy exporting countries. However, increased debt levels from 2020 will constrain spending this year. Global oil price pressures and the expat exodus seen in the last 12 months created long-lasting pressures for the GCC, but Gulf countries continue to provide the most robust opportunities in the coming year. In the UAE and Qatar, major sporting and entertainment events are supporting the short-term economic outlooks. And in Saudi Arabia, we are also expecting more project implementations to return in 2022 and for investment to drive that very recovery next year. But in Kuwait, we are seeing a delayed recovery due to those rising fiscal pressures. The outlook within North Africa also varies quite significantly. Public projects will continue to drive economic growth in 2021 for Egypt, but funding is heavily reliant on foreign investors and lenders. And so a change in the global emerging market sentiments can derail this recovery. As for Morocco, growth will improve in 2021 as public projects supported by the returning foreign direct investments stimulate the economy further. However, much of the country's consumption and production will remain dependent on the EU's recovery, which is expected to suffer from fragility, sadly, in 2021. Whilst in Algeria, the country will face another year of turmoil in 2021 as oil prices remain volatile, despite seeing an upwards improvement. This will leave government revenues pressured and consequentially resulting in shrinking consumer and business support. In the rest of the region, Lebanon will continue to suffer from government ineffectiveness, delaying reforms to unlock the desperately needed bailout. Private confidence will deteriorate further, leaving behind even more economic contraction, unfortunately. After a significant recession in 2020, a fast vaccination program will support Israel's recovery this year, but political risks must be monitored. Whilst in Iraq, we are seeing a perfect storm of severe COVID-19 pressures, fiscal strains, and ongoing political challenges, delaying a recovery in the market. And finally, for Iran's election, we believe that the elections themselves will dictate the pace of the nuclear deal talks with the US, and there is a growing likelihood that Iran could return as an operable market in 2022, but the market remains largely pressured by those crippling sanctions and structurally devastating purchasing power deteriorations.
And of course, the COVID-19 vaccine rollout will be an important driver of growth for the region, but vaccines matter at different levels as signposts for economic opening up. So the importance of these vaccine programs are not the same for all countries across the region. We are categorizing countries into 3 buckets in the world in terms of their vaccination strategy, as you can see here. Countries that are targeting the virus through some level of restrictions, and hoping to accelerate their vaccination programs and gradually lift restrictions. That's the blue category you see here. Majority of the countries fall into that category. However, countries that are not prioritizing vaccinations immediately, but have very strict border controls and are actually trying to eliminate the virus, those would be the red box that you see here. And the final category is around countries that are tolerating the virus by keeping restriction levels relatively low and are implementing a very slow vaccination program. And actually, when we look at how the region falls into that, most GCC countries, Israel, Morocco, and Algeria, are in that first reduction, virus reduction strategy category, meaning watching the vaccine figures will be important signposts for economic normalization in those countries. But when you look at Egypt and Iraq that are implementing a virus tolerance strategy, the vaccination program is not the best signpost for the economy. And we see mainly developed Asia implementing a virus elimination strategy. For example, Australia, New Zealand, but also China. And this is important for the MENA region because the strict border controls may delay tourist arrivals, for example, from China this year. And in terms of domestic economic normalization, we expect to see a fast pace of vaccination across the GCC relative, for example, to the world average. But as you can see, the conservative approach of governments will ensure that the risk of restrictions remains with us throughout, especially Q2, but even potentially in Q3 2021. So targeted vaccinations, but also very careful opening up plans across the GCC. Of course, UAE leading in that pace. When we look at North Africa, Morocco is implementing a relatively rapid vaccination program, which will position it well to receive tourists in late 2021, once European countries also complete their vaccinations. Algeria's rollout is based on the plan to localize Sputnik V vaccine production, so allowing a time frame for the production of that, quality assurance. It kind of suggests that July 2021 is probably the earliest for when vaccination rates in Algeria will rise to an effective level. Egypt's rollout remains one of the slowest, unfortunately, in the MENA region, only just beginning to vaccinate the senior and vulnerable population. The government's new proposition to also charge $12 for vaccinations will increase the risk that fewer citizens will get the vaccine, particularly among those hit hard by the pandemic. And in the rest of the region, Israel, of course, emerges as a country leading the world with its program. Currently, 60% of the population has received 1 vaccine dose and 50% has received 2 doses. So because of the success, we are seeing the government roll out even a green passport program, which is allowing people to kind of have a record of their vaccination that allows them to be more mobile in the economy. Lebanon's vaccine rollout is expected to reach full kind of immunization by late Q2 2022 due to logistical and funding risks. And unfortunately, they are exacerbated by the latest threat from the World Bank to pull potentially funding due to a number of politicians violating the agreement. And that kind of wraps up a very quick summary of the vaccination rollout and how they're going to be impacting the economies in this region. And considering that recovery pace, the vaccine rollout, but also your own perceived opportunities and risks, we would like to pose you one more quick polling question here, if we can bring that up, where we would like to ask you where you expect to put any additional investments this year. It's a highly uncertain year with all of these vaccinations and recovery pace. We've put a few of the top markets in the region, but it'll be great to see where you are betting on this year. We'll give you a few seconds as well to quickly take a look at this poll. All right, I think we can see the results of our poll coming up.
It seems like half of the respondents have agreed that Saudi Arabia would be the go-to market for investing the most additional resources, and a quarter have agreed that the UAE would follow in line, whilst others are also looking at Egypt and perhaps some other markets. But it does stand out that perhaps Algeria's volatile situation has put off any additional investments from the respondents today.
I guess that is going to be largely in line with our presentation coming up as well. I think from our conversations with our client base, we're seeing Saudi Arabia definitely stand out as an investment destination, but Egypt also getting targeted attention, and UAE as well. Well, why don't we go back to our presentation and start sharing with you some of the risks that we are watching ahead across the region, and I will basically first make sure we start off with our event on Lebanon and pass it on to Mansour.
Thank you, Zainab. So Lebanon's political turmoil will sadly extend throughout 2021, driving the country's worsening outlook. Government formation remains very complex as the Prime Minister designate Hariri and the President Aoun fail to agree on the cabinet lineup, which really nullifies any ability to predict a timeline. And so we expect to see prolonged lack of political cohesion, meaning government ineffectiveness and slow reforms will protract, as well as more widespread nationwide protests creating an adverse impact on business activity. Now, operationally, we should be bracing for another turmoil year ahead, expecting more volatile currency fluctuations and rapidly deteriorating confidence and purchasing powers. Whilst moving on to Algeria as well, the country's political uncertainties will also stretch throughout this year as the government is yet to gain the support of the mass and nationwide protests do remain prevalent. Algeria will face a testing year ahead with the results of the parliamentary elections, and the success of the vaccination rollout will largely seal the fate of the government and its survival chances. Should the public perceive that elections are not as free as advertised, the results would be more fuel to the ongoing protests, further extending the timeline of the market disruptions. Whilst in the headlining story on the Iranian nuclear deal situation, our base case sees that both Iran and the US will return to negotiations to re-establish the 2015 nuclear deal. However, it will take a while to agree on a new deal, and the build-up talks, or the build-up rather to talks, will be littered with volatility, where we will see waves of escalation and de-escalations followed by softening tones. Now, there are three key events needed to be established so that we see the start of the US-Iran talks, and those are Iran's demand for sanction relief, which is really a deal breaker for Iran here, US demand for Iranian reversal of enrichment levels, but Iran will only oblige once it gets sanction relief assurances, And finally, a continued commitment, which actually is present and explicit from all parties. But of course, there is a risk of talks faltering, which could lead to more drastic instability and geopolitical turmoil, not only in Iran, but also across the Middle East and North Africa.
And we get some questions about Saudi Arabia. There are some sources of risk that exist for that country as well, but just to highlight, we do not expect a major change in policy direction or major disruption to the economy as part of our base case view. Although tensions will increase, we still expect that Saudi Arabia will avoid major broad sanctions from the US. And although we expect some attacks from the Houthis from Yemen to continue, we still believe the risk of civilian casualties and large economic damage remains relatively low. And due to the existing fiscal strains, we think that the political repercussions of an Iran nuclear deal on Saudi will be limited in the medium term, the fiscal strains that exist on Iran, but the rising oil supply risk from a potential deal could be the main challenge that Saudi would have to manage in an oil market. And when we also look at the Israel elections, we've just recently seen those elections. We're again, unfortunately, looking at a potential deadlock in forming a government. While final results will be released in the coming days, we'll need to watch how Netanyahu will attempt to pull supporters and to be able to form a coalition. Our base case forecasts currently assume a right-wing coalition is formed within the second quarter of this year, but of course, delays need to be monitored, and we also should expect some potential important changes in fiscal policy into 2022. And I think the following, of course, a factor that's going to be impacting the macro outlook will be the currency environment, which I'll pass it on to Mansour to give us an update on.
Yes, of course. So aside from political risk, there is also some currency risk to monitor here. Now, the pandemic has actually reinforced the safe haven status of the euro against emerging markets amidst a low-risk fiscal environment and a massive stimulus, guaranteeing risk-free sovereign assets. So the euro will slightly strengthen starting in the second half of this year. The European Commission and respected Eurozone governments will continue to enhance their fiscal stimulus packages throughout the year. Whilst in more terminal grounds, in Lebanon, the lira will devalue in 2021, but it will do so gradually, and we would expect to see the lira's official rate reaching or depreciating to 5,500 liras against the dollar in the very first instance of that devaluation, contingent on reforms, of course. Now, this is lower than previously envisioned, as the prolonged delay in reforms pushed the black market rate to extremely depreciated levels, rendering a clawback for the official rate nearly impossible. And in the absence of reforms and an IMF program, we would expect an even more severe crash in the currency, where we see actually no upper limit to just how much the lira could devalue to. Whilst in Algeria, the country is pursuing a devaluation practice to bring the dinar closer to the parallel market rate within the next 4 years, as the pressure on foreign reserves accelerates rapidly. The first step will be a mild depreciation, which is to 139 dinars against the US dollar, but that will reach 196 dinars to the dollar by 2023, in line with the black market rate. Whilst on the other hand, we are expecting to see Egypt and Morocco enjoy stable exchange rates, supported by good access to favorable foreign borrowing and other inflows of foreign currency. And that naturally moves us to the inflation. So a number of factors will drive inflationary trends around the region. In the GCC, we expect mild inflation to continue in 2021, with price growth coming down in Saudi Arabia in the second half of the year. Whilst in North Africa, stable currencies are keeping inflation rather moderate in Morocco and in Egypt on a relative basis, with Egypt actually being more susceptible to an upwards pressure coming from the imputation of inflation due to the commodity boom that we're witnessing right now. While in Algeria, the depreciation pressures and the austerity measures will drive a strengthening of inflation, particularly in the second half of the year. And elsewhere in the region, Lebanon will continue to battle hyperinflation, surpassing 50% year-on-year price growth in 2021 And mind you, that is on the back of over 80% inflation last year, driven largely by the unfortunate currency crash the country is suffering and the very heavy dependence on imported goods in a very dollarized economy. Iran's inflation will remain heightened but relatively stabilized when we look at historical figures. Once again, pressures are driven by currency volatility, but also largely influenced by the US-led sanctions. Iraq will also see a rise in inflation, having devalued its currency by over 20% this year. And in Israel, we'll continue to see very mild inflation figures of slightly below 2%.
Perfect. And with all of those macro indicators and assumptions with us, let's share with you our outlook on the various sectors across the economies. And just a reminder for our audience here, you can always submit your questions throughout the webinar into the chat function, into the FrontierView webinars that you see in the system. So happy to take your questions throughout the webinar at the end, or of course, we will follow up with any additional details to all of you asking questions. And looking and starting with the public sector in the MENA region, this is of course very important, not just for the sector itself, but also in terms of the ripple effects of government spending policy on the rest of the economies. So under the pandemic, public sector planning priorities had to be rapidly reshuffled, and countries' approach to the economy versus COVID-19 also varied significantly. You have seen countries like Egypt, for example, that chose to, and even as we can see from the numbers here in Morocco, they've chosen to continue to raise spending in 2020, whereas we've seen many countries like Iran, Iraq, Algeria, even Qatar, in Kuwait, Lebanon, cutting expenditures even during the year of a pandemic. And so what we can see across, unfortunately, the entire region is a rise in debt levels and deficit figures after 2020. And what that means is we are carrying these debt and deficit levels into 2021 and experiencing some of the ripple effects of that. Most of the debt that we see in the region is manageable. Probably Lebanon kind of emerges out as a key risk, but beyond that, we don't expect major sovereign defaults. But of course, debt matters not just in terms of a default risk, but in terms of influencing fiscal policy. UAE, we believe, will try to limit the pressure on the private sector, but actually the budgets there are showing some decline in spending. In Saudi Arabia, we do not expect to see any further kind of VAT, but of course, we want to evaluate any discounts on the VAT, but we want to monitor import tariffs risk and into basically 2022, the ongoing utilization of taxes. Qatar and Kuwait, of course, planning for those potential taxes as well, but they will try to time them in a way that does not have as much impact on the consumers. We don't expect major changes in Egypt and Morocco, but in Algeria, fiscal consolidation needs can result in some spending cuts and tax depending on the level of social discontent, of course. So when we look in a little bit more depth, we can see that there are a few countries that have taken the decision to cut operating expenditures into 2021, and some that are planning to cut capital expenditures as well. Just to emphasize, for Saudi Arabia, the Treasury itself will be cutting capital expenditures, but the Public Investment Fund is picking up quite a bit of that burden of that investment spending. And in many countries, we are also anticipating additional fiscal reforms or austerity measures that can unfortunately add pressure on to consumers. So some of the measures that have been taken so far in 2020 have already impacted consumers, but the countries you see here are where we expect some new measures potentially that can further add some pressure onto the private sector. And if we look at just for a moment more specifically on the healthcare side, overall, we believe companies will need to prepare for the fiscal strains that we've seen to be driving pricing pressures, for increasing popularity of centralized procurement as well, and for rising localization pressures. We will also see the evolution of stakeholder management into a hybrid form, we believe. Of course, there's a need to immediately return to face-to-face engagement, but there may be some evaluation to keep certain large-scale activities at the online level for profitability purposes as well, and for reaching a much wider audience. And medical tourism, really likely a focus on in the UAE. And for the first 6 months of this year, at least, and it seems potentially even into Q3, we would still expect COVID-19 to take the resource and attention priority for a lot of decision makers. So overall, we are seeing that governments are definitely pressured under additional kind of fiscal strains, and there's going to be a very varied response from them in their way of either using taxes or delaying expenditure plans to be able to limit the rise in their debt levels. So overall, a careful procurement environment ahead. And if we take a look at what that means in terms of more of the industrial side on the B2B side and on overall investments, the full investment figure is important to look at. We've seen a significant kind of decline in investments in Egypt in 2020. However, actually, we've seen some key public projects continue and prevent a much larger decline in that figure. We've actually seen some of the additional focus on from the public project implementation side. In Saudi Arabia, we also saw an important decline in investment spending. We think that some of this is actually going to be coming back in 2021 with a narrow focus on kind of high profile and Vision 2030 projects, and mostly a hospitality sector as well. Qatar and the UAE will continue to prepare for their events, Expo and the World Cup, and otherwise margin pressures and difficulty in demand planning will be limiting investments across the region. So you're seeing quite significant large double-digit declines on the investment side that are definitely returning to growth in 2021, but you can see that we are not recovering that full decline in 2021, probably not even until late 2022. Of course, that's a high-level outlook. When we look at some of the sectoral performances, there are, we believe, some sectors that will perform slightly better this year. We will continue to see demand for food, continuing manufacturing of basic food and beverages, generic pharmaceuticals and medical devices, we believe will continue to be in demand. We will see, again, more on the consumer side, more focus on smaller ticket items. And we will want to watch the changes in interest rate policies across the region for impact on borrowing costs, and also, of course, impact on durable goods consumption as well. We don't expect major increases in rates. However, the pressure is a little bit increasing on the emerging market side this year. We would expect a relatively good performance to continue on the IT telecom software side and the digital solutions side, but of course here prices are still very important. A lot of companies are viewing this sector as a way to increase efficiencies and thus keep kind of costs low. We would expect some kind of demand on the healthcare sector to continue, especially on the COVID side, but the non-COVID side gradually coming up throughout the year and more substantially recovering into 2022. Financial services performance is varying across the region, but most of the countries are still relying on their banking sector to continue to provide some better access to loans, which can support some activity in the industry. Oil and gas, the reason we say struggling is because the need to keep production levels low, unfortunately, is extending into April as well. But of course, some investments are still continuing into the sector. And we believe that a substantial demand pickup is necessary to drive better growth in some of the industrial component production. And also on the construction side as well, we have definitely seen a limited growth in that area. And of course, unfortunately, hospitality and tourism, the last kind of sector to recover, which we will look at in the next few slides. And beyond a sectoral comparison, let's take a look at some of the key markets. Egypt and Morocco definitely have the potential to attract FDI in a post-pandemic world. In Egypt, food retail, more broadly formal retail, electric vehicle manufacturing, and healthcare are important investment areas, but companies are remaining hesitant still to see how the country will emerge out of the pandemic. As for Morocco, renewable energy, automotive, and tourism are focus areas for investment, but the small size of the market and concerns about dependence on the EU, which is experiencing some delays in recovery, can constrain some of the investments. And when we look at the GCC, in Saudi Arabia, we see ongoing focus on, again, on entertainment, hospitality, retail, but also affordable housing and high-profile mega projects. In the UAE, again, mostly a focus on Expo while trying to actually organize and consolidate the real estate market. Kuwait is focusing on healthcare, IT, telecoms, utilities, and some key infrastructure projects. But again, here the story is about public finances being strained. Similarly, in Qatar, we do see a focus on healthcare and education, of course, World Cup preparations, and we do want to watch for the increased use of public-private partnerships or the desire to use them, and that now the lifting of the blockade can attract a bit more investments into the country. Oman is focusing on transportation, logistics, again, healthcare, financial services, and actually defense as well this year. And overall, we can, of course, talk with our clients in a lot more detail across their sectors and their countries. That will look very different. But when we think about the partners that a lot of multinational companies are working with, the pressures on these local partners are going to continue to, unfortunately, remain intense in 2021. The difficulties in demand planning are still very real this year, with uncertainty in vaccination rollouts and economic pickup timelines. And we see that these partners are coming into 2021 with those added financial pressures from last year, and the delayed payments environment in the region remains relatively acute. And of course, there is still the ongoing challenges of reaching customers and of trying to make sense of that increased digitalization trend in a way that actually is the most effective for all of these partners as well. So a lot of complex trends across the private business sector. And with that, I will pass it on to Mansour to share with us our outlook on the consumer sector.
Thank you, Zainab. So fewer COVID-19 restrictions and general economic normalization will support consumption, but consumers will enter 2021 amidst higher unemployment, pressured purchasing power, fluctuating confidence, higher risk of taxation, and weaker support from the government. So Egypt's growth is minimal due to the high base effect from the stockpiling activities that happened last year. So on a year-to-year basis, it is much softer. The KSA was entering 2020 on a strong footing and will likely recover to that in 2021, albeit gradually doing so. Morocco will remain stable, but historically similarly price sensitive, while the GCC should see stable income spending on a high level, also supported by limited travel. However, population declines do present a challenge. High-income consumer opportunity remains in the UAE and Qatar, but very minimal increase in total consumption values is expected this year. Saudi Arabia presents the optimal balance of income level and additional consumption taking place next year. Israel comes second in that sense. Egypt presents, again, the volume game here of low income but high additional consumption throughout the year. Whilst Iran is actually seeing very low consumption growth due to the sanctions, but given its large size, it's registering slightly higher additional consumer spending. Algeria and Morocco will numerically provide similar opportunities, thus considering the political and the operating environment comparison, Morocco will be better to focus on. Now, we expect the expat population to have declined in all countries in the Arab Gulf, with around 1 million person exodus from Saudi Arabia and around 600,000 from the UAE. Moving forward, later this year, lower to mid-income expat population is likely to return with the uptick in project implementation. However, white-collar expat population dynamics will likely remain stagnant. Thus, we are expecting overall soft population dynamics for the GCC. Now, consumer dynamics are changing, with higher emphasis now put online and on online marketing as consumers see more convenience and safety in browsing products on the web. Through the pandemic, we saw an uptick in online transactions, and back in April, we envisioned a small dip of online retail once mobility restrictions are lifted, and we did see that take place in the third quarter of last year. But looking ahead, we expect the e-commerce market in Middle East North Africa to grow considerably due to the region's young population. In addition to that, we already have as well high internet penetration, social media use, and online retail browsing, and the rising investment into the sector now after COVID-19. But if we look at the progress so far, and if we put those in numbers, Saudi Arabia, Egypt, and the UAE led a boom in e-commerce in the Middle East North Africa region last year, as the pandemic forced consumers online, really. The value of the region's e-commerce sector surged 52% to reach over $22 billion by the end of last year, of which 80% came directly from those three markets. Now, operably, Amazon Souq and the online marketplace Noon dominated the sector, accounting for more than 50% of the market share in the region. And the results, particularly in Egypt, show that between the start of the pandemic and now, or the end of the year, e-commerce sales shot up 80% in a matter of really 9 months. Now, total e-commerce activity is expected to have reached $12 billion throughout 2020, and we expect that number to continue to grow in 2021. E-commerce growth has been the most robust, however, in the GCC, where digital payments surged 75% in Saudi Arabia last year, with many companies experiencing triple-digit growth in their online sales, as you can see on the slide here. Meanwhile, in the UAE, online transactions are taking up an increasing share of total consumption in the economy. Different surveys show anywhere between 50 to 73% of consumers are shopping more online since the pandemic started. And many multinationals are using the UAE and the KSA as their initial e-commerce investment destinations, building local team skill sets, intensifying engagement with online aggregators and partners, and adapting their partner management strategy to incorporate their online channel. And lastly, as we mentioned in the beginning of this presentation, tourism recovery will be gradual and most likely returning to pre-COVID-19 levels around 2023 at the earliest. Now, tourism plays a significant role in the region, particularly supporting lesser wealthy countries such as Morocco and Egypt through the influx of foreign currency and the boost that tourism provides to domestic consumption. This naturally generated important demand opportunities to B2Cs in the market, but the pandemic has effectively halted demand from that segment, as of course travel bans ensued. We'll need to monitor Saudi authorities on religious tourism plans, preparations for Expo, and vaccination pace in key tourist host countries such as Europe, Russia, and China to really understand the trends looking ahead in the next couple of years. Specifically in North Africa, we expect Morocco to actually lead the path with earlier return of tourists due to a successful inoculation run, but tough restrictions will be put in place, such as proof of vaccination or negative tests on arrival. As for Egypt, the tourism recovery will be gradual and very late in 2021. We're expecting maybe the mid of Q4 at the very earliest, when we see really notable signs of recovery in visitor numbers. But there is weak confidence in Egypt's ability to contain the virus, and so unvaccinated visitors, particularly young adults and children, will probably dampen the mood and the excitement over planning Egypt's family holidays, and so that will hit bookings further throughout this year. And so we should be probably monitoring how Egypt's COVID strategies will change in the coming months.
Perfect. Thank you, Mansour. And seeing that we have overall a growing but highly complex region that executives will need to manage in 2021, there's going to be a lot of actions that will be taken across companies. So far, the main trends that we've been observing from our client base are, as you see on the slide, Saudi Arabia receiving the scarce investment attention from multinational companies across industries. I think we've seen this in the poll that we've just done in this webinar as well. Opening local offices, increasing sales, marketing and technical personnel are some of those key investments. Local manufacturing and headquarter relocation, we believe, is still unlikely. We have been receiving questions around the latest decision by the kingdom to request companies to have their headquarters based in Saudi to be able to contract to the government. We believe that this decision might in the future be evaluated to provide a bit more details and conditions for that, as it will only be implemented in 2024, and we currently don't expect a major move of headquarters from the UAE into Saudi Arabia yet. And for the UAE, expectations continue to be quite moderate, but it does remain one of the kind of innovation hubs for the multinational companies, where kind of skill sets and product portfolio innovations are definitely implemented. And most companies we're working with are continuing to increase kind of those marketing and promotional activities in Egypt, even for certain sectors evaluating local manufacturing. But of course, the strategy continues to rest on volume growth. Interest in Morocco is rising, but kind of quite hesitantly. The country provides that stable kind of environment in a volatile year, but the country's small size will keep businesses reliant on distributors still, we believe. Political instability and fiscal constraints are causing executives to deprioritize Algeria, and I think we've seen that in the polling result as well. But maintaining the existing business is critical because the country is still of an important size. And many companies outside of the healthcare sector at this point, unfortunately, it seems, are freezing additional investments or even sometimes operations in Lebanon. And of course, we'll want to see how that evolves in the near future. And before we share with you the main actions we believe multinational companies should focus on this year, we'd again like to have one last polling question for our audience. We would like to ask you how you are planning to boost profitability in the region. We know that growth has to normalize, demand patterns have to normalize this year, but if we see our polling question coming up, we would like to ask you, after a difficult 2020, as you focus on profitability, what are some of the top actions that you will take? And of course, happy to talk to each and every one of you separately on these strategies. Let's give you a few seconds to also look at this polling question. All right, let's see what the results are.
It appears that we're seeing that there is a focus on high margin customer segments and products, and that's nearly 41% of you guys, as well as second in line increasing sales volumes and reducing operational costs, which is understandable given the volatility. And the bottom line is pursuing price increases with about 12% of the audience.
I think we've definitely seen that price hesitancy, price competition intensify across the region, and it seems that it is complicating at least some decisions to raise prices, and that especially on even the B2B side, it's going to be very much reliant on ability to communicate the value of the product. But I think the more and more companies are focusing on those high margin customers, and it seems we might see even more competition in those more resilient segments as well. Why don't we take a look at our last slide of the webinar, the key actions that we see multinationals take in order to hit the commercial targets in 2021 to support both margins and hopefully see that growth targets hit. We believe executives will need to maintain their scenario work definitely for 2021, revise their longer term assumptions as we also look to identify new sources of opportunity in the longer term as well, and prepare for more intense price competition. It seems is already impacting the businesses on the line, and we are seeing a lot of focus on creating a comprehensive digital strategy, and not just one that looks at how to grow one channel on e-commerce, but actually viewing that strategy, that space as a place for reaching customers, marketing, for collaboration between online and offline sales. And then lastly, we are seeing ongoing focus on upgrading local team and partner skill sets to this changing environment. With that, we would like to wrap up our side of the presentation. We have a few minutes on the questions side. I believe we've received a question. I'd like to pose that to you, Mansour, on the outlook for the Egyptian consumer this year. We've seen a lot of changes taking place in that market, and also a bit of an uncertainty around the vaccination program, but also the lack of restrictions. Can you give us a sense on the consumer view in Egypt?
We expect to see more of a notable growth in consumer spending and confidence coming in the second half of the year. Now, the numbers that we ran through showed that there was a significant growth last year at 8%, but when we break that number down, we understand that a lot of that came from, or a lot of that 8% jump was actually attributed to lockdown-related stockpiling and a low base effect. But in reality, we have been seeing that consumption has been declining since July last year. And actually, we expect to see a gradual recovery of consumer spending in Egypt beginning at the start of the next quarter. And that growth will be quite soft. It will start around 1.5% year on year in Q2, rising to about 4% by the end of the year. Now, sadly, there isn't that tourism boost to really push up consumer spending. So a lot of it is coming organically from the domestic influences. But we have some good pressures, some good drivers coming in the sense that we know that consumer support is being extended further by the government, and that will continue to create more drivers to improve consumer confidence throughout the year, albeit at a gradual basis, pushing towards the end of the year. But if we look at different segments now, the middle class bracket in Egypt was expected to grow this year on the back of improvements in 2019, particularly after obviously what happened in 2016. But we would expect the continuation of the middle income bracket growth to resume again towards the later part of this year.
Perfect. Thank you, Mansour. And we have another question on the outlook for tourism in the UAE, and actually another one on overall the general kind of restaurant and entertainment industry as well. So I'll try to answer them both together. Of course, across many of these countries, the restaurant entertainment industry is also quite highly dependent on the tourism industry. Overall, I think you will see a very varied and different performance and recovery pace. As we have shared with you, the key aspect on the UAE tourism side is with local vaccination program being very successful, let's say very fast relative to global standards, the country domestically will probably be ready to house and welcome tourists by Q3 more comfortably. However, the regulations that the government will place on arrivals will be critical, not just for the kind of safety of the UAE population, but actually to give confidence to other countries that the UAE will not be a hub of virus transmission amongst tourists. And so we still need to watch what kind of entry requirements the country will provide that can give some confidence to countries like the UK and others to be able to send their population as tourists. But when we look at our vaccination timeline expectations, Q4 does look relatively optimistic for the UAE when you also take into account that UK and Europe should have largely vaccinated their critical and even kind of much larger than that vulnerable population, but into that 60 to 70% of their populations. Overall, the restaurant entertainment industry, we believe, is actually still attracting some new investments at the formal level, at the larger scale in the UAE, in Saudi Arabia, for example, even in Egypt. But of course, at the kind of small to medium size, we have seen quite significant kind of pressures on profitability, on cash flow for a lot of businesses. So you're seeing a pretty fragmented performance right now in terms of the larger players that maybe have that cash flow to withstand this pandemic, even those of course under strain, but quite a bit more challenges on that kind of small to medium space. But overall, what we can see is ongoing investment interest due to the longer term potential. It's just going to be about the financial strength of businesses to weather this environment. And we are happy to, of course, discuss more with our clients on a one-on-one basis.
Excellent. Thank you so much, Zainab. So we're now nearing our time limit for today's webinar. If there were any questions that we were unable to answer right now, we will certainly follow up with the responses through your client service manager. Everyone will also receive a recording of the presentation within 24 hours. You can view these webinar material and much more on our new mobile app, which is available to download right now on iOS and on Android. For complimentary access to our suite of resources, including data, dashboard tools, market monitoring reports, please email us at info@frontierview.com, and a member of our team will be shortly in touch. Thank you everyone on the line for joining us today. We look forward to speaking with you again soon, and enjoy the rest of your day.